Last week, I talked about the money calendar. I talked about the quarter. I talked about October, November, December. I threw this big, long chart out there. So let's get into it and let's get right into October. So October is here, and October also is called Uptober because for, again, 9 of the last 10 years, October has actually done quite well when you look at the most popular stocks out there and you push them forward. So looking at October 1st, we see 66 stocks on my radar out of the thousands that are out there. 66 of them, by the way, all 66 have bullish patterns. In fact, if you take a look at this area here, you're going to see 99 for September or for October 2nd, 100 for October 3rd. Look at the weeks. Every single week you see here. In fact, the full week of October has nothing but 100% bullish opportunities. Then we get into 99, 97, 98 for the third week of October. Fourth week of October, we see 97s, 96. What I'm trying to tell you here, folks, is that when we look at all the stocks that I plug into the seasonal calendar, the majority of them in the month of October, and I mean the vast majority of them, are bullish. So I want to give you 3 stocks to kick off the seasonal bull right now as we head into October. And these 3 are Nvidia, NVDA, APH, and Bank of America. Now, all 3 completely different companies. All 3 do different things, okay? All 3 are bullish, and all 3 have 9 of the last 10 years moved up through the month of October and even the month of November. These are longer term. Now, when the other thing that I find that's interesting about these 3 is that when you go out there and you look at data for the last 10 years, all 3 had lost money on these patterns in 2018. Now, if you go back and you look at 2018, you'll find that that was the only year that we saw indices like the Dow, the S&P, and the NASDAQ actually drop. And there were many stocks like these 3 that dropped since then. But also since then, we've not had a single losing year. So 2019, 2020, 2021, 2022, 2023, 2024, 6 years in a row where these 3 stocks have moved higher, right, through October and November. Let's talk about each for a moment. Hey, I'm Tom Gentile, America's pattern trader, and my money calendar patterns can deliver a year's worth of stock profits or more in just 31 days on average. But if you trade options like I do, you can target 100% or more. And when you grab this month's money calendar, you get access to my 7-part cash course designed to teach you exactly how I do it. Scan the QR code or click the link below to get started for just $9. So Nvidia averages 20% during this run that runs up into the holidays. That puts the target on Nvidia, if you look at today's price, which Friday was $178 and change. That puts it above 200 for a target. Continued all-time highs and predicting new all-time highs for Nvidia. Take a look at APH. Now, APH has had an impressive breakout since April. Stock was trading below 60. It has doubled since then. We expect the seasonal trend to push it even higher up into the mid 130s. That's about an 11% return between now and when we get in between the holiday season. And finally, Bank of America, financial stock Bank of America. Bank of America has gone from about $35, below $35 back in April, to now in the low 50s coming into today. During the next few months, we expect Bank of America to have about a 15% increase. And what we're doing, where do we get this information from? I've got years of data that show me all of this. And not only gives me the idea when this is going to happen based on history, but also the average move that has happened based on history as well. History tells us Bank of America is targeting out somewhere above 60 between now and the holiday season. So the question you need to ask yourself is, if you do the research and you believe these three stocks have some go-go juice in them, then what should I do? Well, stocks, calls, spreads. What should I do? Well, it depends on your knowledge, depends on your risk tolerance, and your brokerage account levels. Now, stocks come with a higher cost, but they also have lower overall risks, and I'm talking about time risk, because that's what options have for you, is that when you buy a call option or you buy a call spread, you're going to have a time element there. So you're going to need that stock in question to move to a specific area by a specific time frame in order to make money, right? Call options, they do have a lower cost than the stock itself, but they do have the most time risk due to leverage, due to the fact that many factors that put that time risk in. But keep in mind, if I'm looking at that and I'm looking at a spread, the spread's going to have the lowest cost of all, not only on stocks themselves, but call options too. Also, it does require a higher trading level due to requiring a little more knowledge from you, the options trader. Now, when I look at these three stocks, and I look back at them, and I'm going to look at an Nvidia, low implied volatility compared to where it's been. When I look at Bank of America, Goldilocks, not the cheapest, but not the most expensive. But I'm looking at, is it APH? Let's go back to it and look. APH. APH has high implied volatility. So, you have to know those things as well when you're determining whether you want to go in and look at seasonality based on buying the stock, based on buying the calls, or based on buying the spreads.